Hey everyone, and welcome back to Everything Tesla stock. Following the recent challenges with inflation, as well as production hiccups, Tesla's been on the move to make things better. There's no doubt that Tesla is not only trying to rise above all these challenges, but it's also trying to boost its stock valuation. The recent months have been pretty tough for the EV company, and the stock price has also been suffering a series of upward and downward trends. However, the stock value recently seems to be scaling in the positives. This isn't surprising owing to the many efforts to ramp up production. These positive trends may cause odd investors to reconsider selling their shares and new ones to join the train. Could something big be coming for Tesla? Let's find out. Before we get into it though, don't forget to like and subscribe to our channel, and turn on notifications to stay up to date on everything going on with Tesla. Tesla has been leading the electric car industry for years, constantly thrilling the industry with amazing innovations, and it's still got more to come. Despite the various market challenges, the car company's managed to soar above any of its competitors, in incredible ways too. The CEO of Tesla, Elon Musk, also revealed numerous projects that are in the works. The Tesla's executive, named the world's richest man, is not holding back in seeing Tesla achieve incredible milestones in the industry. Needless to say that these moves are not only beneficial for scaling the company's profit margins, but can also increase the stock valuation. It's no news that Tesla dominates the EV market, especially in countries like the United States, where the electric car market is still extremely dependent on Tesla's production and deliveries. Although as new electric vehicles start to hit the market, it could be expected that Tesla will lose its foothold. But fortunately, that's not been the case. Even though there is a decline in Tesla's market holding, the automaker is increasing its car delivery volumes to cover up for this. Tesla's increased its car production and delivery volumes not only in the US, but also in its markets globally. According to Musk, Tesla has made over 3 million cars since production started. The CEO also revealed in a recent tweet, while adding that the company's Shanghai factory has made 1 million out of this value. Going by Tesla's constant efforts to ramp up its car production and deliveries, this was very much expected, especially considering that the company's delivered about 254,695 vehicles in the second quarter of this year. Tesla's been on the top gear when it comes to car production, and investors are optimistic that there is more on the way. Musk further heightened investors' hopes on this after he announced that the Tesla semi-truck will start shipping this year. The vehicle, which was unveiled in 2017, was delayed several times, even after Tesla expected to start production in 2019. Luckily, the company's CEO revealed that volume production will start in 2020. Even though there was little possibility of vehicles shipping this year. While Musk told investors not to expect any new products to be delivered in 2022, the automaker did install a mega charger station for the vehicles at its Modesto facility, which somehow indicated a little bit of hope. With more cars out, Tesla will most likely continue to dominate the EV market, and thus consequently attract more investors to its stock. Aside from Tesla increasing its car deliveries, the company's expected stock split could be another one of the big factors that could boost its stock price. After the company announced a possible 3-for-1 stock split, several Tesla bulls have revealed their optimism about a possible increase in the stock price. This is well expected, since Tesla's last stock split in 2020 had a positive impact on the stock. Before that split though, Tesla's stock was trading at around $1,300 a share, and eventually surged to a record high of $2,000 a share. Tesla's stock valuation roughly doubled over the next year, following the 5-for-1 split. So it is fair to say investors' expectations are somewhat justified. Likewise, Tesla won't be the first company to split its stock. The top-rated companies like Google, Amazon, and Apple have all done stock splits in the past, and they all yielded positive results. Google split its shares 20-1 in July, and Amazon did the same in June, while Apple split its stocks 5 times since the company became public. Judging by the effect of the stock split on these companies, something similar could be expected for Tesla. At the time of the announcement, Tesla revealed that the 3-for-1 split will require approval by shareholders. Luckily, Tesla shareholders did approve this split at its annual meeting on the 4th of August 2022. The automaker stated that it does expect the reduction in the stock price to make its common stock more accessible to retail investors, which obviously is a big win for Tesla if it's successful. While Tesla bulls are still impressed by the company's new Gigafactory in Berlin, Germany, the EV maker has started making moves towards setting up another Gigafactory in Canada. The company recently met with Canada's federal minister in charge of innovation, science and industry, and they had a meeting over this. In recent news, Musk stated in a company-wide meeting that Tesla is looking at sites in North America. He also did the same at Tesla's annual shareholders meeting earlier in August. Want to know the location for Tesla's new Gigafactory? Well, you better keep watching to find out. There's little or no doubt that Tesla building a Gigafactory in Canada will enable the company to meet its EV production targets, which will consequently rake in more revenue for the automaker. And with more revenue, Tesla can then up its innovations to further secure its place as a leading car company, not only in countries where it has its market, but globally as well. However, even though Tesla is making efforts to boost its car production to the highest level possible, it is not immune to the harsh effects of inflation. According to the company's CEO, Tesla's commodity and component costs are on a downward trend, suggesting that the global economy is past peak inflation. In response to the rising inflation level, Tesla has increased the prices of some of its cars to cover up for the high production expenses. Although Musk claims to have an insight into where the prices are headed over time, and that he does expect inflation to drop rapidly at some point in the future, it's still unclear whether inflation will have much more effect on the automaker than expected. Needless to say that inflation and scarce production resources have taken a big toll not just on Tesla but the EV industry as a whole. Musk stated that the company is struggling to increase output in its Berlin and Texas plants. Upon the opening of these facilities, investors and Tesla bulls expected a significant increase in the company's production level. However, that does not seem to be the case, as Musk revealed that the factories are losing funds because of supply chain and production issues. Luckily for Tesla though, the story recently became a little bit different in its Shanghai factory. According to the EV company, output has increased after production lines were upgraded, reducing the delivery waiting times for its Model 3 and Y cars in China. In similar news, Tesla partnered up with Panasonic Holdings to boost production of the electric vehicle batteries by about 10% by 2024. Although the Japanese company already makes batteries for Tesla at its factory in Osaka, it plans to raise the production efficiency in its US plants as well. Shortage in battery supply is a major hindrance for EV companies just like Tesla, and has delayed many of the automaker's major projects like the expected semi-electric truck, which was supposed to be launched earlier in 2022. But it was delayed due to the battery supply chain constraints. Investors are hopeful that Tesla's partnership with Panasonic is going to help the company overcome one of its major production challenges, and we sure hope so too. However, despite the market challenges, Tesla is still making waves in the industry, like many of its competitors who are struggling to keep their heads above the water. And even though not at a very high rate, the stock price is going higher into the positives. Several market factors have also shown to be of great advantage to Tesla, especially for its proposed Gigafactory in Canada. Canada is a key global producer of copper, nickel, and cobalt, and the country also hosts advanced mineral projects for lithium, graphite, and vanadium. Considering Tesla's high demand for these resources, the automaker is likely to strike a supply chain deal for battery production in Canada. Also, the government of Quebec, the area where Tesla's Gigafactory is most likely to be sited, is investing over $1 billion in promoting projects related to battery production. That's good news for Tesla, and it could potentially solve future supply chain issues after the factory is launched. Overall, Tesla is a highly rated EV company with a strong potential to dominate the industry in the future. With proper execution, the company is likely to achieve most of its planned projects, all of which can see the stock price skyrocketing in the future. However, although Tesla stock seems to be constantly going up the chart, it is important for investors to do proper research on a stock's performance before they invest in it. But what do you think about Tesla's stock performance? Can the stock price increase further in the future? Let us know down below, and while you're still here, go ahead and click on one of these two videos on your screen. See you there.